The conference can start now. We're here.
Yeah, exactly. All right, fellas.
I've
Well,
got my
I'll let you have
whiteboard
it.
All right, good.
Whiteboard now.
Peter disappeared, so it's up to you and me now.
Just you and me, Adam. Can you hear me okay?
Huh?
Can you hear me okay?
I can hear you just fine.
Perfect,
Right, what are we talking about? Boomf.
Well, I think we can start with, maybe the role of fintech over the last year and how it might have changed, and how, things like crowdfunding might play into fintech, both how things have changed over the last year or so with COVID and whatnot, and maybe some trends that we see in the future. And then we can talk about maybe real estate after that. I know that I believe those were the main two topics. So
okay.
Want to start it, Adam? Go ahead. You can start with fintech, and then I'll pick it up after you.
All right. So I'll tell you what, Rob. Fintech is not my area of expertise. Okay. My area of expertise is real estate crowdfunding, how crowdfunding has fundamentally changed capital formation in the real estate industry. That's definitely what I can.
Okay. Yeah, let's start with that then. Yeah, that's fine. We'll start with that. We can go real estate.
I don't know how much that actually dovetails into fintech. All right.
I think they're all interconnected. And I think, when we talk a little bit about the impacts on the real estate sector, we can maybe touch on some of the downstream things that have happened. I come from the construction industry. We build construction software. We're actually doing a crowdfund right now. So that's how I came to be here at the panel. So I think what we can do is kind of dovetail into, how has real estate been affected? What are the downstream, implications to construction? And then how is fintech playing into both of those in kind of this new paradigm? So why don't we start with commercial real estate and real estate in your area of expertise, and I'll jump on after that.
And not actually being able to multitask very well. I am keeping an eye on the chat, and I noticed that Scott McIntyre actually hit the nail on the head. And that is that, what is fintech? What is tech as it applies to anything really, particularly crowdfunding? Tech really is nothing more than a staid, ancient industry, old-fashioned, ancient industry, adopting the use of this device. That's really all it's about. There's really nothing else. So whether it's a sophisticated construction system or using the internet, using the phone and computer and using social media to attract investor prospects and to attract investors and convert them into being prospects, that's all part of tech. And as far as crowdfunding is concerned, tech was never really, there was no incentive to use tech in the real estate industry when it came to capital formation, because you had to have a pre-existing relationship with a prospect before you could meet them. And if you've got a pre-existing relationship, you're gonna meet them, right? That's how people did it. You couldn't advertise. You couldn't use social media. Your website really couldn't do much more than be a glorified business card, right? But now, with the opportunity to raise capital online, to crowdfund your deals, sponsors who are not used to it are actually rapidly coming into the industry and adopting crowdfunding at the same rate as they adopt tech in any way at all.
Yeah, no, absolutely. And I think one of the key points that you're seeing in many markets, especially real estate and capital formation in real estate, is what I always say, the internet finding the power of itself. And I guess the biggest example that you can talk about is, everything that's happened with Wall Street bets and, GameStop and AMC. Like you said, for many years, in order to get traditional loans or, project financing for a new development, or even to sell a piece of commercial real estate, like you said, you kind of have to have these relationships or specialized businesses that, do those things. And while those businesses are still very relevant, to your point, when you have, 6-7 billion people around the globe, all of whom, I think the statistics are only something like 30% of people are still unbanked, but 98 or 95% of people have cell phones around the world, talking even third world countries and things like that. So when you look at just how many people are out there with the power to invest at their fingertips, it was kind of only the next rational step in utilizing the internet and to utilize, those big groups of people for really anything. You can talk about tokenizing a piece of real estate, which is something that's happening. You can talk about, straight crowdfunding real estate, which you see on a lot of sites right now. I think I've seen, at least on Republic, the site that I use the most, I think there's 3 or 4 different major infrastructure projects, like even a apartment down in Miami, I think in Brickell, that is crowdfunding right now. So you're really seeing, I think, what is a new paradigm of peer-to-peer everything, peer-to-peer lending, peer-to-peer real estate, things like that. And at the end of the day, it's, why would you discount the 6-7 billion people out there, who can participate in, real estate or getting involved in some sort of real estate, who may not be able to have done that in the past. So I really think that not only is it the future of commercial real estate, but like some people, like you were just saying, and like kind of some people in the chat are mentioning, it's a good way to put it. It's not a one-to-one communication pathway anymore. It is now, we're all interconnected. One other example I'll talk about before we can, I'll give it back to you, is, just look at how difficult it is if you want to get a loan right now for real estate development or, for something in general. There's a lot of things that go through it. And that's because, a bank, they have risk assessments and things that they have to do. And they have capital partners and they have controls that they have to put on their capital. But maybe that, maybe there's 10 banks and none of them will give you the loan you want. But I promise you that somewhere out there in the vast world of the internet, there's 2,000 people, each of whom would give you $1,000, right? And that's in their risk, preference. They're okay with it. And boom, now you have your funding for your, real estate project. So I think crowdfunding really opens up a lot of new possibilities across multiple different markets. And Adam, I'd love to see any or hear any examples that you might have that you're seeing out there, or good stories that you have to kind of go with that.
All right. So when I look over here, I'm not being rude or anything. I'm not like doing emails or sending texts or anything. I'm looking at some charts that we've been doing. So we have, first of all, let me just contextualize what it is that I do. And I came into the tail end of the last conversation, and I've seen the agenda for the next, for this conference. I just want to be clear the sector of crowdfunding that I'm involved in. I am involved exclusively in commercial real estate crowdfunding. Now, it's a term that is used, has negative connotations in commercial real estate. People think that it's donation-based, that it's gimmicky, right? They're used to dealing with sophisticated, knowledgeable, educated investors who they know personally. And the idea of selling their deals, raising money for their deals online in the same way as you might sell this amazing pen, right, is anathema to the way that they are used to doing it, have been used to doing it since 1933. So that's the first thing. I only look at commercial real estate. Now, I don't know what kind of numbers you guys have been talking about, but in terms of crowdfunding and the impact, I know Woody Ness, great guy, we only thank Woody for his work during the run-up to the Jobs Act of 2012. So he focuses on regulation crowdfunding, regulation CF, which is what I think a lot of people in this conference are talking about. That is not the focus of my work. There are some very small pieces of commercial real estate that are funded using regulation crowdfunding, Reg CF, and then there are some more significantly larger that use Reg A+. What I've been focusing on recently is the distinction, we're going to get technical, the distinction between Regulation D 506B and 506C. Just for that one guy who's listening that doesn't know the difference, I'll just summarize it briefly. Reg B was the original exemption from the Securities Act, one of the original exemptions from the Securities Act of 1933 that allowed you to raise money from people with, ultra simplified, with whom you had a pre-existing relationship. 2012, as part of the Jobs Act, in which that tiny little piece was Reg CF, there was another piece that was added, and that was 506C. What 506C did was it said, you don't have to have a pre-existing relationship. You can go out, you can advertise, you can do whatever you like online. So we've been looking at that distinction. Anybody using 506C has made a conscious decision that they are going to go beyond their existing network. Now, there's a lot of stuff involved in that. I'm just going to stay straight down the middle of the fairway, right, and not go down any rabbit holes. What I can tell you is that using both Reg B and C in 2020, total of $62 billion was filed with the SEC. Okay, that's strictly real estate. Other people, companies, and whatever use these same, but this is these same exemptions, but this is strictly real estate. What is important, profoundly important, and I would like you to know, this is the first time in the history of crowdfunding that anybody is going to hear these data, because we haven't publicized it yet. So exclusive. What's it called? Breaking story on this conference is that we have looked at what happened in 2020. And what happened in 2020? Why was 2020 important for crowdfunding? Through the lens of crowdfunding that I look at it, right? Is because it was during a pandemic, it was the first time there was a downturn, right? There was a severe economic hit. And what you saw, what we see, and I'm looking at my chart here, is that using regulation, 506B, the old-fashioned way, the non-crowdfunding way, there was a decline in the number of registrations for real estate capital formation of about 6%. It went down. Crowdfunding, however, over doubled, went from 7 to 15 billion that's strictly real estate in 2020. So it went from being seven? So 7 into what's that? 49, 7, 1/8. So about 12%. Crowdfunding went from being about 12% of the total real estate capital formation industry to being 25% in 20. And so what that demonstrates is the sheer power of crowdfunding and the uptake that sponsors are adopting. They're adopting crowdfunding. They realize that it is an alternative form of capital formation. On the few people that were chatting before, they were talking about institutional capital. What do you need to do to attract institutional capital? My response to that would be, I don't know, why would you want to? Right? When you can crowdfund. I mean, if you are a huge corporation, sorry, I'll finish this.
No, you're good.
A huge corporation and you need to raise hundreds or billions of dollars, then you've got really no option yet. But if you're not in that rarefied atmosphere of being a huge corporation, crowdfunding is absolutely the best possible option for you. And that doesn't mean WeFunder. That means doing it properly to raise money.
Sure. No, and that's really interesting, talking where we started earlier about how, commercial real estate and financing and capital dovetails into some other markets. So, I come from the construction industry. Obviously, that's what we do at Digibuild. We build construction software. And, just in new construction starts last year, those were way down. So there's a question in the chat about, is that, the statistics you were talking about, is that equivalent to the general real estate development trends from last year? And I would say yes. There was a major decline in new construction real estate starts. Now, many of them were just pushed back or were delayed. If you remember, there was a lot of uncertainty around stimulus bills and things like that. But I think what you're saying there, makes a lot of sense, because if you have institutional capital that is very risk averse or very much will, make their decisions based on what's happening in the macro market, you have limited options there. There's only, let's just say, let's put a big round number to it. That's a guess. Let's say there's 100,000 institutional real estate developers out there who are building consistently. That could be way off, but just as a round number. Well, you probably have maybe 1 billion people out there who might like to throw into a real estate development individually. So I think there's a lot of potential in, that type of capital formation and benefiting other markets too. When you can fund these projects, it has a lot of downstream effects on, other markets, like I said, construction, and new construction starts. Playing into fintech, what we were talking about earlier. Obviously there's a lot that goes on in intersections in fintech and finance in general, that kind of intersects with commercial real estate and whatnot. So I'm definitely with you there. And I think, what happened last year was not only, it was going to happen anyway, seeing a movement away from kind of big, slow institutional companies doing everything to more of like the internet and the internet hive, or the internet swarm, as some people call it, being able to do things like fund capital projects themselves.
All right. So let me jump in with some feedback on what you said, and also share and maybe in part answer Richard. I can't pronounce your last name, I'm sorry, but Richard's comment on the decrease equivalent to the general real estate development trends. So there's a couple of things I'm going to say. First of all, we are talking about two different types of crowdfunding. Let's be really clear. When you talk about 1 billion people, that you're talking about anyone over the age of 18 with a heartbeat, basically, is allowed to invest in crowdfunding. That is regulation CF, that is non-accredited investors. I only focus on the accredited investor industry, just to be clear. Reg B and C exclusively accredited investors. Reg B does look at non-accredited, but it's minor and diminishing. All right, that's number one. So we're looking at two slightly different things, just to contextualize what I'm telling you. Secondly, here's the key about institutional investors. What happens during downturns is that institutional investors, and somebody on the last one, is his name Brian Korn? Sorry, I'm not sure. I'm not very good with memory with names, but he mentioned corporate governance issues. That's fascinating. What a term. Basically, I always think about it in a different vernacular, and that is essentially, if you have an institutional partner, they are basically going to control everything you do. You are going to be running your project by committee. Anytime you hit a certain threshold of expenditure, or you do something, or your numbers don't quite work, boom, there's going to be a hive of institutional players protecting their investor bases, whoever their investors are, their fiduciary responsibility, and you are not going to have control over what you do. You do with crowdfunding, right? Now, what happens during downturns is that kind of fiduciary responsibility that institutions have to their investors, to their capital base, means that they pull back. So we saw this during the 2008-2009 downturn. Everybody pulled back. All the institutions started pulling back. There was no liquidity, but there was. The problem was there was a dam. The liquidity that existed was exactly what you were just talking about. Individual investors dying to take part in this amazing opportunity to invest in distressed real estate didn't have access. And those that did have access were prohibited by law from contacting those investors. Now that has fundamentally changed. So anybody in commercial real estate, or I suppose anywhere else, but again, my area is only real estate, who wants to raise money and have, importantly, alternative access or alternative paths to capital formation simply has no choice than to crowdfund as well. Even if you're raising money from institutions, that's fine. Go ahead and do that. But you need backup, because during a downturn, those institutions will tell you, we're not investing no money until we can see what's happening and what's coming down the path, what's coming down the pipe. Individual investors will be all over that, because at that time you'll see prices decreases, time of opportunity. Now, I have something else to tell you about 2020 and exactly what happened to answer Mark's question. I think is all the way back up the thread now. No idea who asked it. No, Richard's question. I can tell you exactly what happened in 2020 with capital formation, but I'll let you jump in first before I reveal that.
Nice. No, I was just going to talk about, to Peter's question about, real estate capital formation through Reg CF and if it impacts the sorts of projects that are being developed. I'll give my opinion on that, and Adam, you might have thoughts on that too. Personally, I do think so, because a lot of times, if you're a private equity firm, whoever you are, someone considering real estate development, financing and kind of your pro forma and everything from the beginning is going to be something that happens, very early in the development. So I do think you have to be aware of that, because obviously, speaking on my side, I think I'm more the Reg CF side, you can only raise up to 5 million. So, that's still a pretty small amount in relationship to, a commercial build out or a commercial project. So I do think that there is considerations going into that. But I also think, to Adam's point about liquidity and whatnot, raising capital via Reg CF also gives you new options in regards to liquidity, not just now, not just in a downturn, because where, like Adam was saying, a lot of these, big commercial developers, they have risk management principles and things that they have to adhere to during a downturn. But when you're able to start crowdfunding, different investments, and even moving into some of the, what I would call maybe technology of the future that's just starting to kind of rear its head, talking about tokenization of assets, bringing even more liquidity to, imagine having individual shares or individual ownership of a certain section of a major building that you could then, trade or turn into US dollars if you wanted to. It adds a new level of liquidity into previously illiquid, situations. So I definitely think that Reg CF is impacting real estate development capital formation, but I think it's very early. Like I said, you see them here or there, and yeah, to your point, liquidity is everything. And that's why if you look at numbers, right, you can take a subset of institutional investors who get involved specifically in commercial real estate. You've got private equity investors, people like that. And even though there's a lot of them out there, there's a ton of, money in that space, it's still such a small piece compared to all of the capital that's out there in general. Again, going back to what I said earlier about how you have, potentially millions of people who might want to give $1,000, but you don't have millions of, private equity or, REITs or things like that might be wanting to fund these things. So I definitely think liquidity is everything. I agree that marketing is everything. And that's a big thing too, Adam. I think there's, this space right now is getting a lot of attention, especially with the Jobs Act, being expanded and, platforms like, WeFunder or Start Engine or Republic really starting to get a lot of traction. So I'll turn it back over to you. I'm curious about your thoughts on liquidity, at least on your end and the things that you're seeing, maybe not quite Reg CF, but just in general, what you're seeing in that space as far as liquidity goes and new opportunities for liquidity that may not previously have been there.
All right, so crowdfunding is that new opportunity for liquidity. And that's why this is not tongue-in-cheek when I type out marketing is everything, because there is an intersection between Regulation D, Regulation A+, and Regulation CF. Right? They all kind of fit into this crowdfunding bucket. Two of them look at allow for non-accredited investors. One is primarily accredited investors. But the intersection between both of these is marketing. It's as simple as that. If you, it doesn't matter how great your product, you know, if you've got a construction tool and you're raising money on a Reg CF crowdfunding portal, or you've got a, 500,000 square foot office tower downtown major city somewhere, you're raising 25 million in equity to buy that thing. It doesn't matter if you don't market, if people don't know you exist because you have no marketing, you are going to get exactly nowhere, right? You're not going to raise a single penny. You are invisible until you make the effort to market yourself. It's the only way. When you talk about crowdfunding, that fundamentally is all you're talking about. All right. So that's really, really critical. It is the intersection between all these different regulations.
And just one other thing to mention there that we didn't get to, I know we're running out of time here, but there are advantages to having, a lot of investors, like a big group of investors, like, 2,000, 5,000 investors behind you, in the ways of getting your name out there for your brand, right? If you have 5,000 people all out there who are investors in, a building or a company, it's easier to get your name out there. Even us, of our investors on Republic, we've had hundreds of people reach out and say, hey, I own a construction company. I own a real estate company. Can I introduce you to the owner to get, your software in there? So I do think in today's day and age where you're seeing, influencers are really becoming the next marketing arm of business. You look at what Tesla's doing, whether you love or hate Elon Musk, he is speaking to his audience or to a platform and moving markets in a way that no one has ever done before. And I think there is a preview of what is going to be happening for businesses. You see it now, the biggest TikTok influencers out there are partnering with startups, are partnering with venture funds, because the internet has brought the world together and has given voices, very powerful voices, to these influencers. So that's another thing I think want to get brought up is, just the ancillary benefits around new customers and speaking to your customers when you have, Reg CF and Reg A type raises and things like that.
Rob, the bottom line is that you have to become an influencer yourself. It's all well and good to look at Elon Musk and Grant Cardone and any of these other people that are, big, impressive presences online. But you have to, I don't mean you, I mean anybody trying to, well, you as well, actually. I mean,
absolutely.
Like it. Anybody that wants to raise money online needs to be visible. And the way you do that is by having a strong digital presence. Oh my goodness, time is up.
Yes.
Easier said than done. Yes. And in order to get famous, you have to have a setup like Peter. He's got the microphone, he's got the headset, he's got the pillow, he's got it all.
Right.
So,
that's right. Well, the CfPA folks told me that the microphone sucks, so I ordered it over the weekend. Guys, great session. Thank you very much. I hope that you connect afterwards. Rob, I know you have a packed schedule today, so no worries if you got to go. But for everyone in the session, we are going to go into the networking mode, so you can jump between table to table, have a conversation with new people. You'll see that you can kind of click on the on the head of a person and invite them for a chat or set up a meeting with them. Yeah, exactly, just like that.
You're going to put me crash helmet on. What are you talking about?
This is a very violent commentary here. So yeah, we're and after this, we're going to be starting the SEC interview with the SEC at 1:15 p.m. That's going to be a conversation with Jennifer Zapralka, Martha Miller, and Sarah Hanks. I think it's going to be fascinating. Stay around. And if you have any questions about functionality of Remo, I'm going to be in the room, so holler at me. Thank you, Rob, and thank you, Adam.
Sure. So, Peter, I should just hang out if anyone wants to ask a question.
Well, we should. We're kind of at our times.
Okay. I'm good to go.
Just hang out in the Remo session. All right.
Thank you, everybody. Thanks, Peter.
Nice to meet you, Rob. Bye.
Thanks, Adam.